Has China lost its allure to foreign investors? That's the picture painted by mainstream Western media reports this week. But is this the whole truth? For instance, inbound investment in January dropped by 13% year-on-year, but jumped almost 30% from the previous months. The number of foreign companies registered in China also rose by 10% last year. It's not exactly black and white. That's why you're doing the right thing by tuning in here. And here's the big picture. Overall, China acknowledges inbound investment faces challenges, but there are structural changes and bright spots which merit a closer look. Let's do that. And you cannot challenge the credibility of Chinese numbers anymore, right? What's behind these numbers? What's China doing to boost foreign investment? Will it work? Welcome to The Point with me, Liu Xin, coming to you live from Beijing. I'm pleased to be joined from Beijing by Zhou Mi, Deputy Director of the Institute of American and Oceania Study at the Chinese Academy of International Trade and Economic Cooperation. From Gig Harbor in Washington State, Manuel Menendez, founder of MCM Group Holdings, a veteran investor from the US in China, and from Darwin, Australia, Daryl Guppy, former national board member of Australia China Business Council, who is also a veteran investor in China. Gentlemen, welcome to The Point. Let's take a look. Let's dive beneath the surface and take a look at the nuances that you don't get anywhere else. And get ready, there are a couple of numbers I want to share with you. Last year, for instance, as I mentioned, foreign direct investment, or FDI, in the Chinese mainland in actual use totaled $115 billion. That's down by 17% year on year. But here are the highlights. FDI inflow in actual use totaled $14 billion. This is FDI inflow in actual use. That's for the month of January, and that went up by 28% from December last year. Now, FDI inflows almost doubled last year on year, in the medical equipment and instrument manufacturing sector. It rose by 40% in the professional technical services sector and by 20% in the computer and office equipment manufacturing sector. In terms of source countries, FDI from the UK, the Republic of Korea, and the Netherlands, among others, surged by 300%, 100%, and 76% respectively in January, and that's after hitting double-digit growth last year for these countries. Finally, 59,000 new foreign invested companies were registered all over China in 2024. That's a 10% increase year on year. A lot of numbers to digest, but overall, what I'm trying to say, there are bright spots, and very bright. Mr. Zhou, what do you make of these numbers in general?
Well, we know that the FDI is a very important source of innovation and credibilities for the cooperation in different countries. So FDI in China is always be welcomed. If you're looking at the number, it has reached a pretty high levels compared with decades ago. But we still have to look at the reason why FDI come here to China, because they want to make better use of the markets and the resources of the manufacturing, and also enjoy the very good environment of China. So if you're looking at that data, I would say that it's not just happened overnight. For most of the investment, it happened for many years. So the companies, the investors, they have trying to understand the economic logic of China for many years, and they believe that the investment in China is really profitable. So if you're looking at the data, as you mentioned, that the data, the investment in the medical care and also in instrument manufacturing, there are so many new innovation-based sectors that are really the attractive point of Chinese industries. Well, on the other hand, if you're looking at the data, I mean, it's a little bit confusing for the total number of investment has decreased, but the number of companies increased. I think that is because that
we'll get to that in just a moment. It's a little bit too packed for now, Manny, and thank you for joining us in the middle of the night, I know. What do you make of this number? It seems cannot be squared, right? Overall, there's a drop, but for a certain sector, for certain months, for certain region, there is considerable growth. What do you make of it?
I think it's logical, actually, because there's been so much uncertainty in the market, especially discussions globally about tariffs and people are thinking about, how to invest and where to invest. But there's no doubt about that there's still significant opportunity in China. China's still growing. There's still second, third, fourth, fifth tier cities that are growing. So I think the message is China is still a positive place to put FDI, whether it's a vertical FDI, horizontal FDI, or we call a conglomerate FDI. There's different forms of FDI, but China still has significant potential. But I think just as President Xi talks about high quality a focus now on economic development, investors look for high quality investments in specific areas now, not just generally, but very, very targeted. And those areas that have been coming out in the plan are very much in line where the opportunities are, especially in healthcare.
We'll get into the details in just a moment. Daryl, how do you look at the overall picture? Because if we look at the United Nations Conference for Development, which is known as UNCTAD, which is the UN agency tallying global investment, direct investment trend, FDI in developing countries, or FDI to developing countries, has been decreasing for 2 years in a row. That's basically the undertone of the situation we're looking at, right, Daryl?
Correct. Well, I think the important difference with China is, first of all, there has been further improvement in the investment environment, a greater level of certainty, and President Xi and the NDRC have certainly moved in that direction. The other thing that's important, I think, is that we are looking at an increase in SMEs, small, medium enterprises, that are increasing their footprint and their foreign direct investment in China. It's no longer coming necessarily from the big companies. And that signals a change in the type of FDI that's coming into China and the opportunities that they are seeing in this expanding market. Not a falling market, but an expanding market. So we've got a lot more interest coming from smaller companies. That tells us why there is such a large number of new investments coming into China.
This is interesting, Daryl. I want to follow up a little bit on that, because overall we are seeing some multinationals upgrading their investment or diversifying their investment from China to other countries, not to countries such as in the United States if they don't absolutely have to, but there's 10% more foreign investor companies established in China. Why are they willing to buck the trend and take the risks by investing their future here? What drives them specifically?
The lack of tariffs are the most important thing. We underestimate the impact that tariffs are going to have on the global trading system and investment flows globally. The United States is withdrawing into itself, making it more difficult for foreign investors to be involved in America. So where is that capital going to flow? It flows into friendlier environments. And the recent changes that have been announced has made China a friendlier environment for foreign direct investment. And then on top of that, you have all of these new areas that are opening up that provide a whole range of opportunities that are not available in the United States. So to some extent, the United States is, as we would say, cutting off its nose to spite its face. China is stepping into that gap. It becomes a more reliable and respected partner that supports the multipolarity that contributes to a successful global trading system.
Mr. Zhou, let's dive back into some of the details here. For instance, we're seeing investment from certain countries significantly outperforming those from others. Germany has always been a bright spot, but now we're seeing UK, we're seeing the Republic of Korea, we're seeing the Netherlands bucking the trend, not just for any particular month, but actually, as I said, for the whole year of 2024. These countries' investment went up by double digit, and in the month of January, investment from the UK jumped by 300%. What's behind that?
Well, I think that the differences between the different countries are depending on the several factors. The first of all is whether the relation between these countries with China is stronger. I think that you can find that the relation between UK and China has improved in the recent recent times, and both sides are trying to discuss more things, not only on the economic levels, but also on the financial cooperation or other issues. Well, it is also true that China has a lot of attractiveness for investors by the manufacturing. So the Germany and also Netherlands, they do have the abilities and trying to have a better integration with China's supply chain. And for Korea, I believe that it is also because of many reasons, like for the RCEP, the Regional Free Trade Agreement, has improved the position for both sides to trying to have a better connection with each other. So I believe these are really some of the factors we can look at.
Is it a temporary abnormal phenomenon, or is this going to translate to a relatively midterm, even longer trend, Mr. Zhou?
In my understanding, yeah, the investment is comparatively longer than the trade because they have to do a lot of preparation before they make the decisions.
I see.
So they will strengthen the cooperation for a longer term.
Okay, let's bring back Manny, this time on the line. Sorry, Manny, we don't see your face, but we hear you. Oh, okay, just a moment. I was told that, okay, Daryl, let me go to you then for this question. I'm sure you can give us some insight as well, because despite U.S. investment restrictions on China, which you mentioned just now, U.S. FDI, according to U.S. numbers, actually has been very stable and growing over the past 5 years, from 2018 to 2023. We can bring up a chart there. As you can see, despite all the restrictions on investing in China and businesses with China, U.S. investors have not been deterred. They have actually steadily invested more in China. Daryl, how do you explain this?
America cannot afford to ignore China. First of all, it has shifted a large level of its advanced manufacturing to China, tapping into China's educated and skilled workforce that cannot be easily replicated back in the United States. That's number one. Number two, many American companies, we'll take General Motors for example, most of their profits come out of China. They can't walk away from the China market, just as it is, let alone the fact that the China market is going to continue to expand. So American companies find themselves between a rock and a hard place. Tariffs on the one hand, but the necessity of being able to access the China market to continue to expand, to continue to remain profitable, and to bring those profits back to America. So the question becomes, how do they continue to survive in China? They're not going to pull back unless they are absolutely forced to. But if they do, the gap is increasingly filled, as was noted a moment or two ago, by investments coming in from Belt and Road Initiative countries, from coming in from ASEAN and RCEP countries as well.
Let's try to reach Manny and have first-hand testimony. Manny, are American businesses really caught between a rock and a hard place, because they have been actually steadying, increasing their overall investment in China, but the geopolitical tension, the policy from the Biden and the Trump administration have been not helpful. How do they survive? What's on their mind?
I think that the message from Washington is mixed, and it's unpredictable. One day there's tariffs on certain countries, and then the next day they're pulled back. So business people like predictability and stability. And right now the predictability factor is not in place, so I think that's why you see a more reserved and conservative approach. But there are companies that have still pushed forward even under the uncertainties. Marriott Corporation opened up 3 new hotel deals per week last year in 2024. Domino's Pizza, U.S.-based company, is opening up 1 new Domino's every 36 hours. And Starbucks, as you know, has 7,000 stores in China and 70,000 local employees, and still is pushing forward. So while there's uncertainty, there's still people that are doing well in the China market. And I think that just the uncertainty is causing people to be a little bit more conservative at the moment. But I hope that levels out, hopefully by the summertime.
Okay, we'll get back to that before we go, I promise. But we have been talking about China's action plan. Actually, there have been a series of policy and actions to attract foreign direct investment, to improve investment environment. For instance, as I said, last March, a 24-point action plan was introduced, and in July last year, the report On the 20th National Congress of the ruling party, the CPC reaffirmed that China is committed to its fundamental national policy. And we don't joke by saying it's our fundamental national policy to further opening up to the outside world. Last December, a Central Economic Work Conference, which is the top-level conference on setting the tone for economic policy, was held, and it reiterated this position. Now, the latest move, the 20-point action plan, was unveiled on Wednesday. Mr. Zhou, in a nutshell, what's new about this one? What is the central mission of this one?
Yeah, I think that is a really important plan for us to look at what are the government of China trying to deliver for the foreign investors. We know from last year, the later of last year, the Chinese government has mentioned that we want to use integrated policies to try to stabilize the development of economy and give more confidence. So for these action plans, we know that the investment from other countries are still one of the most important for Chinese policies. So we can see that it's not only mentioned about the integration of the different policies, but also trying to encourage more in-depth opening up in several sectors, and also trying to give a fair treatment for the companies who are going to get loans from Chinese market. So I think that there are so many new things that we can expect from this working and action plans.
One of the top priority on the agenda, I should say, is to expand pilot programs to open up the telecommunications, healthcare, and education sectors. Daryl, going to you, I know you're involved in education. You're trying to do consulting on that based on your experience. Does such message struck a chord with you, if I may put it this way, immediately?
Yes, it certainly strikes a chord. And some of the changes that are taking place are the development, of course, of Central and Western China. So these are new areas that we can move into for foreign investment perspectives. They offer more return. So changes in terms of property rights protection, some of the industrial subsidies that have been flagged, the environmental standards, and the ability to be involved in government procurement, they are all changes that foreign investors have been looking for, and it makes a more attractive investment environment. Yes, the investment into education and health, remember, this is part of a broader policy to move towards a common prosperity, to lift people further out of poverty. So there are plenty of opportunities for foreigners to be involved in the development in these areas. So they are key for both investment and for development in China as well.
You actually spell out the essence of the central mission of these policy is for development of China, for jobs, for its economy, so on and so forth. But for the foreign businesses operating in China, their top concern is, are these action plans being translated into reality? Has there been a steady and continuing improvement of the environment and regulation environment for investors? You have been here since the very beginning of China's reform and opening up during Deng Xiaoping era, all the way up to now. You're still based in China. I know you're in the United States, maybe for holiday. What is your testament? Do you think China is serious, is genuine in its will and serious in carrying out these pronouncements?
I think it's genuine. I think it's just another chapter in the opening. 45 years now. It's just another chapter. I think it's refinement. So one of the things I've always admired about China is they look at the current circumstances and they put into place new rules, new regulations, new opportunities that focus on the current reality. And I think that this plan that has just come out, this 2025 action plan for foreign investment, is very positive. And in particular, I was very interested to see that you can have, a wholly owned healthcare hospital now in China, and I think that's a big area of growth. The other thing that I think we should not lose sight of is that you can actually use domestic funds and domestic loans as part of your foreign investment mix, which I think is a very, very major point where that will stimulate more FDI investment in those key areas and in those key regions in China. But there's one area, if I may comment, where there needs to be one improvement, is that's when FDI actually comes into China into what you call your capital account or your registered capital account, to move it from that capital account at the bank into your operating account or your renminbi account. That time lag between the registered capital account to the actual operating account, it just takes too long. And I've had that experience, and we need to work with the banks to make sure the China banks to shorten that time, and that will help get money into the market more quickly.
Well, it's very interesting you mentioned this, because one of the top priority is to listen to the aspiration, the concerns, such problems, and solve them on the spot, or to coordinate on their behalf with the various departments on various levels. Many, over the years, are people listening? Are the policymakers listening to people like you, to your problems, and try to help out? Have you tried to channel your voices up to the policymakers?
Yeah, I'm trying to do that now, because this is a recent experience over 2024 where I've sent in registered capital and I could not get it into my operating account. It took more than 1 month. And that money that goes into your operating account is to pay salaries. It's all to pay operating expenses in China. So we have to shorten that gap because it allows monies to flow in quickly and then used and utilized quickly.
Okay.
So the answer is yes. I'm reaching out to friends at MOFCOM, and I will reach out to some friends at MDRC and see if we can work through that issue, because all the other things that are happening, the policies and the adjustments, are all positive. But if you can't get money into your account so you can pay the bills in a quick and efficient way, I think that's a bottleneck that we have to work on and fix. And I know China will do that. I think they once they hear more details about it, I think they'll jump on it actually quite quickly.
Good. Fingers crossed for
and
you.
Maybe the point will help get the message to them.
Well, I'll try. We're not translated in Chinese, but who knows? Maybe these people, they have their ears open, their eyes open, and they want to hear what foreign investors are thinking, and they want to improve their services. Mr. Zhou, how do you look at the kind of message that policymakers have sent out through various occasions, that they want to help solve problems for foreign investors so that they stay, so that more will come?
Yeah, it is true that it has been put in the law that we want to involve the foreign investors in the process of when we're setting our criteria or standards. So I think that is welcome for many of the different provinces and also administrations to looking for what kind things that we can do. But it's not just trying to give a special treatment for the FDIs. We want to provide a fair competition status for all of them. So I think that the opinions and the suggestions are really important for us to reduce the barriers and trying to give a more international standard environment for the investors, know where they come from. So actually, I think that is really helpful for us to understand the real demands from this market and trying to provide them with the latest policies and the better environment and treatment.
Daryl, Mr. Zhou touched upon a very important issue, which is national treatment, equal treatment among investors from different countries, but also between foreign investors and their Chinese counterparts. It was some of the questions where some of the questions focused on in that very important press conference announcing the action plan. How do you look at that? Do you, for instance, in terms of government procurement, the policymakers are saying they are trying to clarify the standards of what is actually made in China, wherever your investment may come from. How do you look at that process?
Well, we need to remember that in every country, there is always a bias towards the domestic industry. China is not unique in that. We try and level the playing field as much as possible in every country. When we say that it's open to foreign participation in government procurement, we don't mean it's 100% open. We never do that. There are always areas that are excluded. There are always some barriers. However, what's important is that China has an excellent track record on policy implementation, and that makes for investment certainty. We know that China does listen to the concerns of foreign investors. It doesn't always act as quickly as perhaps the foreign investors would like, but it does listen, and it integrates that into its broader economic policy so that China is not disadvantaged and foreign investors aren't disadvantaged. It's always a balancing act. So the latest announcements have taken that balancing act further. The opening up of government procurement is a major change that's taken place. It's going to open a whole range of new foreign direct investment activity, but it's not going to open up the entire thing. That would be an unreasonable expectation. So we've got a good balance that's developed at the moment, and that balance will change as the economics change and as the geopolitical situation changes as well.
Well, there was also mention about data flow, data security, because for every country, again, domestic data, when it's brought across the border, there is a certain risks there. What can be brought, what cannot be brought. There need to be set rules. I want to get back to Mr. Zhou here from the Chinese perspective. What is China doing to ensure that there is security, of course, but there is also predictability. There's a rule that's set in stone that everybody can abide by, can understand, and it's not changing every day.
Well, it's a really difficult areas for us to trying to give the boundaries, because for the data cross-border flow, I think there are so many discussion and even different definitions on that and practices also. So if you're looking at the practices of China, we are developing the digital economy so well, and we are trying to encourage the data to be one of the most precious treasuries for the companies. So when the companies are setting their servers maybe in other countries, how can we just try to make a better service for them? Well, if you're looking at this thing, that happened many decades ago, but we are trying to make it more clarified in recent years. That is by defining what kind of things should be limited. I think that for the negative list, that they are trying to do some of the experiences in Hainan and also in Shantou in Guangdong province. They are trying to clarify what kind of things are most sensitive. And outside of that, there are many of these businesses data can be flowed freely to other countries. I mean, that is not only about China, because interflow maybe have different directions. We have to cooperate with other governments to ensure that the data flow is just not one way. So that is maybe much more difficult and more complicated.
Well, we all know the hearing. We all watched the hearing on Capitol Hill when the TikTok CEO was being grilled. Yeah, let's see. I think there needs to be some standards. There needs to be some rules. I'm running out of time. No time to talk to you, Manny, about more details, but I'm sure we'll get you back on the show in the near future. Many thanks to Zhou Mi, Deputy Director of Institute of American Oceania Study at the Chinese Academy of International Trade and Economic Cooperation, and Daryl Guppy, former National Board Member of Australia-China Business Council, and of course Manny on the line, founder of MCM Group Holdings, who has witnessed China's entire process of reform and opening up and still involved in it. Thank you, and with that we come to the end of this special edition of The Point with me, Liu Xin. As always, you can follow me on Facebook and X using the handle Liu Xin in Beijing. On behalf of the whole team, thank you for watching. You've got the point.